Hi, and welcome to the Tactical Tuesday video. And today we are going to get into some trading models here. And before I start, I want to just give you a quick overview over what I have plotted here, what's going to happen with the channel over the next month. And let me share this system here I developed. Basically, what we are going to do is we are going to try out a daily live video, and we will do Trading Mondays, where we talk about the unique opportunity trading in Tesla with a long-term investment focus, maximizing alpha over a core portfolio of Tesla. On Wednesdays, we have Strategy Wednesdays, where it's all about fundamentals and thinking through Tesla insights, how Optimus and FSD are going to change the world and drive that appreciation of the stock. And then we have Civilization Fridays, where we go very strategic and look at Tesla's impact on our civilization. And more importantly, how all of us can actually help build the future and what I call the target state, a better designed civilization that runs on Optimus, the humanoid revolution, and all these things. And then in between, we will have Tactical Tuesdays, Tactical Thursdays, where we just have tactical insertions of whatever comes up. That can be trading, it can be strategy, it can be civilization, or it can be surprises, especially on the weekends. So this just very briefly what the plan is here. And let's go into what we want to discuss today on this Tuesday. And what we want to discuss today is a strategy that I call Alpha Plus. Not that I need to brand this thing, but for my own recognition. It's the purpose of this trading strategy in Tesla is not to do some tactical in and out trading, but the question how we can capitalize on this once in a lifetime opportunity that is represented by Tesla. And as you know, my Tesla price target for 2030 is around 10,900. That means it's a 30x from here, 30 times up for Tesla stock. I went all in why I believe that and presented my fundamental model. When I put my investor hat on today, the question, of course, is if I have that high level of conviction, you can have 100% Tesla in the portfolio. By the way, none of this is investment advice. This just applies to me. You have to look into your own risk return profile, what you want. So you should not try any of these things at home. I'm just sharing what I'm doing, to get smart feedback from you guys. But the question for me was, can I develop a strategy that continuously outperforms a 100% Tesla portfolio? Because let's assume you have I normalize everything to 1,000 Tesla shares here to make it easy to understand. So let's assume we have 1,000 shares of Tesla. That's our portfolio, $350,000. How do we make sure if that goes up 50%, that ours goes up, let's say 100%? And how do we make sure if it goes down 50%, ours only goes down 25%? That's called alpha as opposed to beta, right? Beta just means if Tesla doubles, you quadruple. But if Tesla goes down 50%, you go down 100%, which is pretty bad. That is beta, going up and down, like with a leverage on Tesla. Alpha means you're always outperforming. If it goes down, you go down less. If it goes up, you go up more. Obviously, that's the holy grail of trading. I'm not saying that is easy, but that is the purpose of this video, to look into a strategy that has performed very well this year for me. Now, if you want to create leverage over a core Tesla portfolio, there are basically two strategies that you can apply. One is attempted by Chris Camillo of Dumb Money, very smart guy, Chris. He talked about it right now. He's all into Tesla. He believes this is a huge opportunity, similar to me, but he has a diversified portfolio. So Chris Camillo at Dumb Money, he has a specific strategy where he tries to get into the Tesla trade with extreme leverage through options, through long call options. But the problem there is you're always losing your money all the time, except for when you're exactly right? Because you need short-term call options out of the money. Let's say Tesla right now is 350. You're basically buying calls, that expire in a month, and you are buying tons of these calls that expire, in a month at 380 strike price or something. And if Tesla doesn't move, you lose all your money. But if Tesla goes into this exponential upwards trajectory, you make infinite amounts of money. So it's a very high risk trade. I don't like it for myself. Chris likes it. He likes the thrill probably. And you need to be right about the prediction of when this upwards move happens in a very narrow time frame. I don't like it because to make that prediction is very hard, because my specialty is to understand Tesla, to understand technology, and to understand when things like this happen. But here you have to anticipate when Wall Street is going to react to it, which is a fool's game in my opinion, because then you have to get into people's head, and I can't do that, especially if they're having weird incentives. The second opportunity, or the second strategy, is to try to generate alpha all the time, less alpha, right? 100 to 200%, not like 1,000% over Tesla, by basically doing what I will explain now. And I like that strategy more because it allows me to generate alpha all the time, but less. So let's look into that. I explained the problem with leverage, right? If you just go into a position like Tesla, and let's say you have $350,000 and you buy 100% Tesla shares, and then you decide to lever up, right? And say you would take on debt or margin debt of another 350,000. So instead of buying 1,000 shares of Tesla and spending 100% of your money on Tesla, you're buying 2,000 shares and you're spending 200% of your money. Now, if Tesla goes up, 10, instead of making 10,000, you're making 20,000. That sounds great, but if it goes down, you're basically losing twice as much as you have. So if Tesla drops 50%, you lost 100% of your money. The problem with leverage is you're not generating alpha, you're generating beta. And the problem is if Tesla drops, let's say 25%, you drop 50%. If you drop 50%, here comes the problem. You get a margin call, you get squeezed out of your position. So if Tesla drops 25% and then goes back up to where it was, you're not back where you were below. You actually generated negative alpha because you got squeezed out. That is why leverage doesn't work with very volatile stocks. It's too dangerous. You always get squeezed out and you always end up at the short end of the stick. Now, in order to beat this, we need to get a little more sophisticated. So let me share how my strategy worked here. First of all, I want to go into the model and why it's worth listening to this and explain what performance I generated this year with this. So here you basically see an overview over the alpha strategy. So we are at, that was I think yesterday, Tesla was year to date up 40.8%. My Alpha Plus strategy portfolio was up 80.5%. And my more extreme experimental Alpha X portfolio was up 36.4%. So when you look at the actually generated alpha, of course, if you just have Tesla, you have zero alpha, right? You just have this 40.8% you made. And this is adjusted for a 1,000 Tesla share portfolio. So you're up $100,000 from 250,000 to 350,000, basically, since beginning of the year. Here you would be up from 250,000 to much more, right? And what you see here is that the extreme risk portfolio that I designed actually underperformed Tesla. So it was very stressful, very difficult to trade. And if I would just have bought 100% Tesla shares, I would have performed better than this Alpha X portfolio. But the Alpha Plus portfolio, this is the one we discussed today, is actually up dramatically over Tesla. So I have a relative alpha of 98%, which means the gains of Tesla, I have nearly 100% more gains than Tesla. And in absolute terms, I generated 39.8 percentage points more return, 80% total over 40. So that's why it's worth looking into the strategy, why it worked. And Alpha X is the exact same strategy with more leverage. There you see what leverage can do to you. If you go too risky, you just lose performance because of the drops in between. If you, just for fun, if you compare the Alpha Plus and Tesla holdings with the indices, you also see what's happening here. Tesla generated 14.8% absolute alpha over the S&P, so 14.8 percentage points more return than the S&P year to date. That tells you Tesla's on a good move, but I tell you next year or the year after might be much bigger than that. 21% over the Dow and 12% over the NASDAQ. And the Alpha Plus strategy, 45% absolute alpha over S&P, 61 over Dow, and 52 over NASDAQ. Relative alpha of the Alpha Plus strategy, 224 over Dow 30. That's pretty good. So that's just regarding the performance. Let's look into how this actually works. So we start off this whole consideration by actually looking into 3 types of phases that Tesla shares can be in. And let me explain quickly what I mean with phases. So a phase, I structure that into 3 different phases that Tesla shares can be in. If we zoom out into, let's say, a 1-year perspective, what you see is Tesla has these phases that are bearish, where it just keeps dropping and dropping and dropping, like this year, right? So in December 2023, you were at 253, and then all the way here, down, 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 all the way to end of January, you just have a terrible time, right? This thing keeps sliding and sliding and sliding. That is kind of a crash, mini crash. You in this phase is something where you don't do the strategy I'm explaining today. And then you have, of course, these boom phases, like here, April, that was the earnings. And then also the vote, the shareholder vote, where it goes up. Here, this is a very extreme up move. Then here, you have an even greater up move. Then you had earnings before the election. That was a huge jump here. And then finally, you had the election. That was a crazy bull run. So you have the bearish drops, and then you have these very aggressive leaps. And sometimes they end up being a very, very big run. They can be even much bigger than this run. But the interesting thing is in between, actually 80 to 90% of the time, you have sideways moves, right? This one. And then you have this one. And then you have this one. Then you had this one. This was a very dangerous phase here for me. This one. And now you have the last month, where it's also very flat here, right? And in these sideways moves, if you're a little bit leveraged, they look like, whoa, it's just moving sideways. But that's a 350 to 310 or 315 drop. And then here, it always goes up to 360 and then down to 325, right? Week by week. And these drops and rises are pretty painful if you're just keeping your leveraged portfolio, right? Because this is actually a lot of losses from here to here, and it's a lot of gains from here to here. And if you don't do anything, you just constantly lose a lot of money and gain a lot of money, and you're getting nowhere. And I observed this for a very long time, for many years, and realized, well, if I could do 2 things, I would win a lot. And the 2 things you want to do to really make a big difference is this. The first thing you want to do is you want to understand these phases, right? You want to determine, are you actually in one of these upward bull runs, or in a crash scenario, or in a sideways move? That's the first thing. You need to be good in understanding where you are at, and you need to be very good in knowing when you don't know, right? If you're not sure, don't do anything, because it's dangerous. I want to focus today on the sideways moves, but I'm saying you need to be able to recognize quickly when you're breaking out of the sideways move. So the model that I'm presenting today is designed to capitalize on these sideways phases. So let's go into what that actually means. Once you're in a sideways move, you want to be able to put on a very specific strategy that allows you to cautiously take advantage of the situation. Let's go back into the model and see how this actually can look like. So, and as I said, don't try this at home. I'm just sharing some ideas here so you understand how I think about it and how I was able to generate this. So basically what I'm doing, let's start with a scenario. Here's your scenario. Where first of all, you determine in your sideways move, what is the upper bound, the upper resistance of the move, and what is the lower resistance. And right now, this is actually right now happening, December 3rd and the last weeks. What I see is like there's this 360 area where it always bounces. It tries to break through 360, can't do it. And then there's this lower bound of 311 to 325. Over the last weeks, it was 325. And that has become pretty reliable resistance, right? So I thought, well, why would I just sit by the sidelines and not do anything about it? So I determine now, I split this into 3 phases. Very simple by dividing it, right? You basically have 325 to 337. That's a lower third. That is what I call the bullish to neutral phase. So you're in the bullish phase below 337 because it's likely to bounce back to 360. Then you have the neutral phase from 337 to 348. And then from 348 to 360, you are in bearish territory because then it's likely to drop, as we just saw today, by the way. So if you have that strategy, then you can do in these 3 scenarios 3 different things. So let me go through this and explain this. Here, we are assuming short-term bullish, long-term bullish. Everything here is long-term bullish. But this would be a short-term bullish situation because the stock price we assume is at 337. So if I see it's at 337, maybe a little below that, I put on a bullish position. Here's my Tesla core position. I'm normalizing this to 1,000 shares for easier understanding. Let's assume I would have 1,000 shares. So you have 337,000 market value of your Tesla shares. And now this is basically the trade I'm putting on in this week, right? These are weekly trades, so it doesn't use too much of my time, but it's good. So because I believe this thing goes upwards now, is much more likely to go up than down in this channel, I'm putting on short puts, right? So I'm selling 330 strike price puts. These are all weeklies, so they're expiring the Friday of that week. This is Monday. And it pays you $6.90, so you're getting cash $6,900. That's not bad for a $330,000 portfolio. Then I'm putting a short put, a 380 put, so deep in the money to capitalize on a downside move much stronger, and you're getting $22,000 cash. Of course, you're not getting all that money very likely, but that's what you get. And then for good measure, you're also putting in short calls, 360 strike price, because I'm assuming it's not exceeding 360. So I would only not get that money if it doesn't exceed 360. And then, very important, I put some security in here. That is, the price is offset by the 360 short calls with long puts, 10 long puts, right? In case something goes wrong, you have this downside protection because you're basically putting on pretty significant leverage, because technically you put on 150% leverage here, right? Because you're short now 15 puts. That is that equates to 1,500 additional Tesla shares you're basically long. I hope this is not too complicated, but you can look all these things up if you want. So basically what I did here is with 1,000 core position shares, I put on 1,500. You have to multiply these things with 100, the options contracts, and said, I'm going basically long another 1,500 shares, but in a way that gives me a lot of time decay value here, right? So if Tesla would basically drop from here against my prediction, but it would drop to 331, I still can keep the entire $6,900. So what does it all mean? If here is my simulation, this is just simple math here, or not so simple math. We are at 337. This tells you the end of week stock price simulation. So if Tesla drops to 320, which would not what I would have predicted, right? Because we are at the lower end of the funnel. At 320, I would be negative 5% alpha. So compared to Tesla, the Tesla core gain, if I would only have this Tesla 1,000 share position, I would have lost $17,000 if the stock drops to 320 from 337. With my strategy, I would lose $35,650. Pretty bad. So I would have generated negative alpha. I would have lost 5% more than with Tesla only. So that tells you that there's danger here, right? But that would be very wrong. That would go against my prediction. If it drops to 330 against my prediction, so also against me, I still would have generated 0.4% alpha, interestingly. So you have a lot of buffer because of these out of the money short puts. So here you basically already positive, even though I was wrong in this case. If I'm correct, and I'm slightly correct, this thing goes to 345, I'm generating 2.6% alpha, which is very significant. So the Tesla core position goes up $8,000. I'm going up $16,850. So you can tell this is very significant stuff. And if it goes to 360, I'm of course making bank here. Tesla core position goes up 23,000. I'm going up 39,000. So you're making 4.8%. So that tells you how powerful this strategy is, but it also tells you where the warning signal is. By the way, if this drops much more than 320, you're not getting much worse here because of your puts, right? You have long puts. So there's not a total termination risk here. But if that really moves against you, if you're really wrong about your channel prediction, it hurts, right? You're definitely underperforming. But it also tells you if you're wrong once and then you're right twice here, you already are back to, within 3 weeks of 1 week being really wrong and 2 weeks being really right, you're already plus 4-point-something% alpha in 3 weeks. So that gives you a quick idea how this works. And I will go now a little further down to explain what happens if you get into the bullish territory, not bullish, in the bearish territory, if you're getting to the upper resistance, just for fun. So let's assume your share price is 361, and I'm talking about the current funnel that I'm seeing, current channel. 361, and yesterday Tesla was actually very close at 357. If you're at 361 here simulated, I would assume you are at the very upper end of the resistance, which means this thing drops back down very likely, unless something happens. And so now we are having to put on a bearish, short-term bearish trade, and that trade looks very different. Right here, you're going short calls very heavily to be safe, 370 calls. So you sell 15 of these contracts, which gives you roughly $10,000. For good measure, I'm putting against the short put. I'm always doing that. You put in that position -5, but these outweigh this. So in the case Tesla doesn't drop below 350, you're making that money. And then you're putting on your long put pretty aggressively here. 15 contracts, so you're getting very aggressive here. That costs you a lot of money, because if it doesn't fall below that, you lost that money in premium. And your total potential is this, right? So you understand what I'm doing here. I'm going much more long puts because I assume this is going to drop. I don't want to lose that core position too much. And I'm selling calls on top of it. And let's see what that does. Here is the end of week stock price, and here's what you make, right? So if the stock falls to 335, which can happen very easily here, your absolute alpha is 5%, which is enormous. So 5% of the entire portfolio is additional gain. So Tesla core position loses $26,000. And by the way, that's what I mean. If you're just in Tesla 100%, this little move from 361 to 335, you're going down $26,000 in a week. It's just painful. With this strategy, you're only going down 6,000. That means you get 5.5% alpha. And if you do this a few times, you dramatically outperform a Tesla core position by hedging these downsides in the right way. If it goes to 350, you have 1.39%. If you go to 370, you also have 1.39% alpha. If the stock moves against you in this position, so instead of dropping, this actually keeps rising to 385 because you were wrong about the channel and missed the next phase, you are nearly 5% negative alpha. So Tesla core makes 24,000, but your portfolio here makes only 6,500. So you see the general gist, right? If you do these things and you're wrong about the general prediction, directionally, you are just, you lose money or you lose alpha. But it also shows you have a lot of buffer. So even if it goes to 370, you were wrong about the prediction, but just a little bit wrong, you still generate alpha. That's the advantage of this strategy, doing the short puts and short calls in a smart way while protecting your downside. Now, let's stop this for now. I know this is complex, but look at the numbers. You can just stop the video, take a closer look. And if you have questions, ask me in the comments, or you can do your own research about how options work. This strategy was very successful for me and keeps being very successful. But it's very important to mention that the only reason this is successful is because I put in a lot of time and energy, many years here, to understand Tesla very well. So when you do something like this, while there is a very significant technical component, right, where you look at the charts, I'm not a chart, voodoo believer. It's more like very basic stuff. If this rally goes up and exhausts itself at 360, what we see right now, I don't think it can break through this resistance unless there's some significant new catalyst, because the market has shown people don't want to buy it above that currently. So, and if it drops and it keeps bouncing at 325 back up, it also means people don't want to sell below that unless something fundamentally changes. So with this strategy, the key to success is understand these mechanics, but also be very, very good. Thanks, Marcus Aurelius is saying, like, I've never seen an option strategy explained so clearly. I appreciate it. I mean, it's all about just showing the model and showing the actual numbers. People talk too much and don't show the models. And you can always stop and take a closer look. So the most important thing here, I speak from my own experience, you have to be right about this first big thing. Are we really in this channel where the stock keeps bouncing at 325 around there and keeps bouncing off the 360? Or are we going to leave that channel? And if we leave that channel, the strategy I just presented can get you into deep trouble if you're really wrong. So if you're putting on a bearish little trade and then the stock goes to 420 because there's suddenly like a leak of Optimus, like doing some crazy work, that's really bad. And you're not going to lose money on this. You're still making money, but you're losing so much alpha over your core position that it hurts a lot. So you don't want that, and you need to really follow my channel or other channels or use other information sources to really stay ahead and really have an information and knowledge advantage over Wall Street. What has fundamentally happened with Tesla? You need to understand when this stock is going to break out with hard catalysts. And on the other side, I think the main downside risk for Tesla is actually more macro market than Tesla itself. So you need to spot if the market gets weak and gets ready for a crash of some sort, because Tesla will always be heavily affected by that. So on the downside, you don't want to be in a situation where stock drops to 330, you think you're in the channel, it bounces back off to 360, and guess what? There's some mini January crash coming and Tesla goes to 250. This can be very bad, but normally I protect this with puts. So it's very important. I think the reason I was able to generate this much alpha, and I hope to generate even more next year, is because I stay really on top of the fundamentals of Tesla and blend it with technicals, and the fundamentals always override technical stuff. It's very important to understand these breakouts. And then you can put on these, in these waiting phases, this strategy that just churns out money when nothing happens or Tesla moves in this channel. That's where the most alpha is generated. I can talk in future videos more about what will happen in a crash or in this exponential bull run to ideally generate alpha over a Tesla core position. You have to switch. It's a little easier, right, to give away some things. If we know Optimus is coming and suddenly Wall Street is being forced to recognize that revenue stream, you want to be leveraged somehow. I am always skeptical about long calls, out of the money calls, because it takes just the tiniest little mistake in timing and you lose all your money. So long calls are just, if you are completely certain about an event, fine. But who can be certain about an event? I think no one. So I love much more deep in the money short puts. That's the magic key to be really leveraged and always make money without paying any kind of time premium as long as you're not wrong, the price you pay for the deep in the money short puts, you basically can, if you have 1,000 Tesla share core position, you can leverage deep into these deep in the money short puts, like for example, a strike price of 700 expiring in August next year. That's free money. It's just sitting there. You get all the cash up front, and this thing waits there. You sell 10 contracts, and you have another 1,000 shares of Tesla sitting there waiting to make you money. The risk is if you're wrong and this goes down, it destroys your portfolio, of course, because you literally have 2,000 shares of Tesla or 3,000. And you be cautious and need to avoid doing that. Ideally, you do that when there is a clear uptrend and okay, now we are in crazy land. This thing goes up like crazy. I need to jump on the train. Then you go deep in the money short puts. And only if it's like, yeah, I'm always against long calls. I think this is just not fun. You pay too much money for that stuff. So that's kind of what I'm thinking. I think these are great strategies, but there's always, once you go beyond 100%, you always take on very significant risks. You have to be extremely cautious because you can be right 9 times and make money. All it takes is being wrong 1 time and you can lose everything. You have to be very cautious, especially, and that's the risk with these strategies, especially because it's so easy to make a lot of money quickly out of the gate. And that is dangerous because it makes you complacent. And as I said, all it takes is 1 mistake and you're toast. So that's why it takes a ton of discipline here. And complete 360 information. So I think it's a lot of fun doing this for me because I've done this for quite a while. And I think, we should not lose track with all this trading talk about the bigger picture. And I had a great conversation in the comments with someone who said, why would I do all that crazy stuff and risk everything and can't sleep at night if I can just be super long Tesla and sleep and always make money? And I think that's a very good point. I think, it's much more recommended for most people to not do that and just be very long Tesla and, enjoy the ride. I'm just doing that because I see it's a once in a lifetime opportunity here. This is crazy what's going to happen, in my opinion. And, alpha also means instead of having 1,000 shares, if you have 1,000 shares, you are producing more shares, right? So after 6 months, you have 1,500 shares and then you have 2,000 shares. And that's very, very compelling in a situation like Tesla, where it's so obvious what's going to happen if you have the knowledge. So I hope you enjoyed that. I hope I'm not overloading you guys with trading. Don't think I'm a trader now. This is just additional leverage to take advantage of the situation. As I mentioned, on Wednesdays, we have Strategy Wednesdays, where we look into fundamental insights and outlooks of Tesla, FSD, Optimus, and robots. And Friday, I want to really invest every week in civilization exploration, the type of civilization we actually want to build. The capital Tesla generates for all of us, what we do with it. Chris Camillo just talked about his foundation and how he deploys his money philanthropically. I think, quite frankly, that's always a mistake. There's a reason why Elon doesn't do any philanthropic donations, because if you have a plan, a master plan, the money and value you're generating for everyone by not doing philanthropy is much greater. So philanthropy for me is always a sign that people don't have a plan how to generate value and hope other people do it for them. So Fridays, we would talk about what are the big first principle problems humanity actually faces, or all of us faces. I don't want to talk about just humanity. It's about us, right? What are the real big problems we face? When you talk about generating more Teslas and more Elon Musks, I think it's not so much about more Elon Musk. It's about more opportunities like Tesla. And my belief is they are actually sitting much more at the core of civilization, which are the human needs. It's about babies and families. It's about health. It's about cities. That's where we would benefit the most. And that's where the money should go and our brains should go. And for me, Tesla trading and investing and understand Elon, understanding the robots, understanding FSD and all these things that are coming, I see it more as a giant training academy for all of us, where we are getting trained. Do we make the right calls? Do we understand these things faster than others? And if we can generate a lot of money with Tesla, alpha, more money than just having Tesla, it shows that all of us here on YouTube, on X, the traders, the retail guys that outperform Wall Street, that we are good in figuring out the future. And I think that's not just to tap ourselves on the shoulder, it's something that is great to know because we have to build the future. So for me, this is a training exercise for all of us. Can we show we can predict and understand Tesla better than anyone else? Because if we can do that, we can predict and understand the world and the future better than anyone else. And then we can go to work. So stay tuned. I hope that was very helpful. And if you have any questions about options or trading things, just leave it in the comments. Of course, I'm never giving investment advice, but if you have technical questions, happy to discuss that. I hope you enjoyed that. So this week, this will be all for trading this week. The rest will be fundamental analysis. But next week, Monday, you can tune in again for the outlook for next week. Thanks for watching. Subscribe and see you very soon.